This is the holy.
Good evening, everybody. My bad. I didn't know we were live. I was waiting. Good evening, everybody. Good evening, everybody. How you guys doing? Man, I've missed you guys. It's been quite a while. I haven't been here in 2 weeks. And I am happy and excited to be back and having let me just quickly put my phone on do not disturb so that we don't get disturbed. Before we proceed, can I just make sure that everybody can hear me, everybody can see me? Please, if you can hear me, put a fire emoji in the comment section and say we can hear you, or then rather put some cash emojis and say cash money, we can hear you. Easy, cash money, we can hear you. Easy. Welcome to yet another episode of our live trading sessions, proudly sponsored by OctaFX with your host Isaac Izy. I'm just waiting for people to join in. I see we have about 40 people in the chat today. We have about 40 people. Welcome guys. The numbers are increasing. If you can hear me, just drop a fire emoji or just comment I can hear you in the comment section in the live chat, and then let us proceed. We are already 5 minutes late, so let's get to it. Good evening, everybody. Good morning, good afternoon, good evening, depending on where you are in the world. I am tuning in all the way from South Africa, Johannesburg. And let me know your name, which city you're from, which country you're from, if whether you're a beginner or you're an advanced trader or you're in between. Let me know in the comment section so I know my audience. So when I don't give you beginner stuff, I don't give you more complicated stuff, so I can give you exactly what you need. I always say although Wagyu steak is very valuable to meat eaters or meat lovers, it means nothing to a vegetarian, right? So even if I can give you the most important things today that don't appeal to you or mean anything to you, I would have wasted time. You would have wasted your time. So let me know where you're from, which country you're from, which city you're from, and whether you're a beginner, you're an advanced trader, or you are in between, so make sure I give you the best that you deserve. Yes sir. I see we have India in the house. I see we have Afghanistan in the house. I see we have Zimbabwe in the house. I see we have Mumbai, India in the house. Great. We have a lot of India. In the house. Which is beautiful. All right. Which is beautiful. We have Favor all the way from Nigeria. What's going on, brother? Where in Nigeria are you from? We have Daniel all the way from South Africa. Where in South Africa are you from? We have all the way from Nigeria, total beginner Nigeria. We have Cape Town, we have Malaysia, we have Pretoria. We are great. We have a lot of beginners in the house. We have mainly Nigeria, we have India, and we have South Africa. Any other country? So far we have South Africa, we have India, and we have Nigeria, all the way from Nigeria. Where in Nigeria are you guys from? Please keep telling me. All the way from Edo State, all the way from Lagos. We have all the way from India. Beautiful stuff. I'm excited to have you guys here today. I'm excited to be sharing knowledge with you guys. We have advanced traders in the house, we have advanced traders, we have beginner traders in the house. To the advanced traders, let's share a bit of knowledge, let's share the things that as we go on about explaining the concepts that we're going to be discussing today. If you have any concepts regarding today or anything to add, please feel free to add, so I can also learn from you. You can never have enough knowledge. So for all the advanced traders that are here, let's build a community, let's talk, let's share what we know based on the concept we'll be discussing today, so our fellow beginners as well can also grasp more information from you. I am excited to be hosting this tonight. Shout out to OctaFX for making this possible for you and I to engage. Man, I'm super excited. Hopefully we get some opportunities in the market today and we can all be profitable. If you had attended our previous live trading session, you must be profitable on the trade that I called out on GBP USD. That was a beautiful trade. I hope you guys did catch that. And again, just a reminder, if you're from South Africa and you are not in the Telegram channel, make sure at the end of this live video we're gonna put out a link to the Telegram channel. Make sure that you join that Telegram channel. This is where I call out signals. This is where I give trading psychology tips. This is where we just discuss Forex educational content, everything that has to do with Forex to help you to become a better trader. It gets shared in that group, so make sure you are part of that Telegram channel. All right, so before I proceed today, I just have a little disclaimer that any opinion, news, research, prices, analysis, or any other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute as investment advice. If you are looking for investment advice, please make sure that you speak to a regulated individual or a regulated entity. Make sure that they are regulated by the financial board of the country that you're in, so they can give you appropriate, reasonable financial advice. What we do here is just general market commentary. All right, now that we got that out of the way, let us proceed. And before we finish off today's session, I just want to remind you guys that at the end of this session, I'm going to give you a promo code that you can use to claim your 100% deposit bonus. All right, after attending this lesson, you must use the promo code that I will give you, all right, to double your deposit and maximize your profit potential. I will share the promo code at the end of the session. All right, each session that we're going to have, I will share that promo code with you, so you can get 100% trading bonus. Isn't that amazing? Shout out to OctaFX for making that possible for us. All right, before we proceed, let me just drink some water. You know what they say, drink water and mind your business. And thanks to OctaFX for this cool water bottle that they gave me. I love this. Love it. Thank you, OctaFX. All right, for those of you that are first timers here, you are welcome. I welcome you. All right, my name is Isaac Izy. Let me introduce myself. My name is Isaac Izy. I'm a professional forex trader with over 10 years of experience. I am the founder of an academy called Flexi Forex Trading College, and over the years we have trained over 5,000 students. All right, and we have held more than 300 forex seminars throughout the South African region, in Namibia, Botswana, all of the Southern African region. And our passion is to provide new traders with proven strategies to empower them to succeed. If you guys know, if you have attended my sessions before, you know it's easy. I make forex seem easy because my name is Easy. Right, you get it? You see what I did there? No pun intended. Haha. All right, that is our passion, to provide new traders with proven strategies. We simplify forex trading for beginners, even for advanced traders, to make sure that you guys become profitable. All right, so let us proceed. So before we begin today, as I promised you guys, I'm gonna give you some last time, was it last week or 2 weeks back, I promised you guys that I'm going to give you some risk management rules that you can apply to make sure that you have set rules for yourself that can improve your risk management. And as much as these things sound simple, believe me, they are not. They are very, very important. They may sound simple, but they are very, very important, and they will help you to take your risk management up a notch. As I always say, you can always make $1 million in the Forex market, but without risk management, you are guaranteed that you're gonna take it back to the market. But in the sense as well, you can make $1 million in the market, and with proper risk management rules, you are on your way to making more $1 million. You get it? So now let's get to it. Rule number 1, avoid putting all your capital in a single trade. Avoid putting all your capital in a single trade. So if you are a trader, understand that this is business of probability. We don't trade certainties, we trade probabilities. So you cannot put all your capital in one single trade. What happens if you lose it? It means you lose all your capital. But you must, they always say, don't put all your eggs in one basket. Same thing applies. Do not put all your capital into a single trade. Divide your capital so you get more opportunities in the market. You cannot rely on one single trade to change your financial life. All right. Let's say, for instance, you have $1,000. Divide it into 10. Maybe use $100 for one trade. Don't use all the $1,000 in one trade. That's how people lose all their capital. Okay, that's rule number 1. Avoid putting all your capital in a single trade. Rule number 2 is before you even start trading, you need to define your risk tolerance. You need to know how much you are willing to use before you press the buy or sell button. That is very important, guys. Before you can't decide after you've executed the trade of how much you are willing to lose. No, you define that risk tolerance before you press the buy or sell button. Are we together? So you need to know how much you are willing to lose before you press the buy or sell button. If you lose that money, you've already made the decision that you are okay with losing that money, and that doesn't affect your emotions in trading. The reason why a lot of traders revenge trade and end up losing more money and putting themselves in debt is because they haven't defined their risk tolerance. All right, that's why a lot of them, when you enter trades, your palms start being sweaty, your heart starts beating fast, you are fearful because you haven't defined your risk tolerance. But professional traders like myself are able to place a trade and go on about our day, doing our other businesses, knowing very well if the market goes against us and we lose, we are okay with that loss. We've already made peace with that loss because we have defined our risk tolerance. For instance, I know I cannot go, above $500 per trade. I can't. I can't have a loss of more than $500 on one single trade. So I know that this is my risk tolerance. Once I go above $500, I start having issues, I start panicking a bit. I start having issues, start doubting myself. So I always make sure that in every trade that I take, my losses don't exceed $500. You get what I'm saying? So that is what I have defined for myself. So you need to define your risk tolerance as well. Number 3 is you need to know when you will exit the trade before you enter it. This is in line with the previous rule. You need to know when you will exit the trade before you enter it, either in a loss or in profit. You need to determine these rules before you even press the sell or buy button. You need to know your exit strategy. We call it an exit strategy. There are certain rules that you need to put in place. You tell yourself, this is the number of pips I'm expecting. This is when I will take this trade. If I go into losses, this is when I will take the loss. This is when I will exit this trade, whether in losses or in profit. So make sure that you have that in place. Know when you will exit the trade before you even enter the trade. Rule number 4 is stop chasing losses. Traders need to learn to accept losses the same way they accept profits. All right, you need to learn to accept losses the same way you accept profits. So stop chasing losses. Another reason why a lot of traders lose their money is because they chase the losses. You enter a trade, you lose $100. Instead of trying to look for more profitable opportunities, what you do is you start chasing the $100 that you have lost. And then at the end of the day, you end up even losing more because you are no longer sober-minded. You accept a loss and you move on from it, and you start a new trade from a clean slate. Stop chasing losses. All right, the very same way, when you are profitable, you accept the profit as yours. Also take the loss in that same manner. I expect you to be consistent. We cannot be hypocrites. Okay, we cannot be hypocrites. We cannot accept the profits and disregard the losses. No. We are the ones that took those trades, so we need to stop chasing those losses. Are we together? If you are with me, drop some fire emojis, drop some cash emojis in the comment section. All right, and lastly is you need to remember that profits are only yours when they hit your bank account. This is another issue that a lot of traders are facing. You find that a person has grown an account, maybe 1,000% growth, only to blow it in one day because they believe that their money is there as well. It's still in the trading account. No, it's not. If the money is still in the trading account, it belongs to the market. Don't count it as your money. You only count it as your money when it hits your your bank account. Another reason why traders cannot even trace their profitability is because they don't withdraw in time. You need to have a withdrawal rule. Every Friday you need to withdraw, or every Wednesday, or whenever you decide that you want to withdraw, whenever you hit a certain target, you need to withdraw your money and make sure that it's in your bank account so you can be accountable for it. All right, so that's rule number 5. Remember that profits are only yours when they hit your bank account. You don't count them if they are still in the trading account. So that's my top 5 risk management rules. Number 1 is avoid putting all your capital in a single trade. Number 2 is define your risk tolerance. Number 3 is know when you will exit the trade before you even enter it. Number 4 is stop chasing losses. And number 5 is remember that the profits are only yours when they hit your bank account. Great. So today, last week, I think not last week, the week before last, when we were discussing, I discussed using RB numbers as your support and resistance, and there were a few questions about what is support and resistance, or what is support and resistance. How do I, without using the RB number, what is the concept of support and resistance? So today I decided, let me include this into today's session so I can give you guys a bit of a background of what support and resistance is and how it works. All right, So say, what about gold? We thought price rejected 1930, but price going upside. How do we find perfect direction? We're gonna get to it. Actually, it shows that you're not here. Now that you mention it, the 2 weeks back, I did say that gold is gonna go up. I even gave you prices that people should enter when on gold. So if you were here 2 weeks back, you should have taken that buy on gold. It was a beautiful trade. We took it as well. So yes, we're gonna get to the charts now, and then we're gonna analyze and determine the direction. We're gonna get to it. For now, as I said, we're going to discuss support and resistance. I'm gonna give you guys a basic understanding because a lot of people miss support and resistance, and I've often had traders saying support and resistance doesn't work, or I don't know how to plot my support and resistance and all of that. So today I'm gonna help you guys with that, and from there we're gonna discuss a few chart patterns that I use to determine, to get my entries in conjunction with what I've taught you guys before. But my secret, RB numbers is my secret. You know how I get my sniper entries, RB numbers. But also I use all this other chart pattern because I've told you guys I'm a price action trader, so I use this chart patterns as well to get my edge in the market. All right, so we're going to discuss triangles today. I'm going to give you the rules, what is a perfect triangle in the market and how you can trade it, wedge patterns, and also again we're going to get to some risk management tips. All right, we've already discussed that anyway, so let's get to it. So support and resistance, you can take out your notes right now. you can take out, support and resistance is one of the most widely used concepts in trading. You cannot discuss trading without discussing support and resistance. And I know a lot of traders or newbie traders, especially, the ones that come up with fancy concept, they say support and resistance doesn't work, whatever. But you cannot discuss trading without support and resistance or supply and demand. You simply just cannot, all right? But strangely enough, everyone seems to have their own idea of how you should measure support and resistance, all right? Looking at this graph here, right? Let's look at the graph here, all right? It's really that simple, right? As you can see, we have a zigzag pattern there in a form of an uptrend, all right? When the price moves up and then pulls back, the highest point that it has reached, the highest point that the market has reached and pulled back, this is what we call a resistance. In simple terms, the market is trying to go up, right? Think of resistance as a roof, ceiling, right? The market tries to go up, the price gets resisted by the ceiling, right? When it gets resisted by the ceiling, what does it do? It falls down. So it's the same way as me. If I try to jump up right now and I get to the ceiling, I will be resisted and then I will come down. And that's why we call it a resistance. Now, when I come down and I land on the floor, now what's the floor doing? The floor is supporting me. So that's why we call it a support. A support now, the market supports the price, right? So the market goes up, it gets a resistance, then it falls down. It gets support, and from a support it goes up again, and then it breaks the previous resistance. Again, think about it as a ceiling. If I gather enough strength from the floor and I jump up and I break the roof, when I come back again, where am I going to come back? It's the law of gravity. I need to go up and then I need to come back again. But necessarily I just won't maybe come back on this floor. I will go on the second floor. Does that make sense? And so forth and so forth. That's what basically support and resistance is. Now, that is in simple terms to make it understandable to the beginners. But now in terms of Forex trading, a resistance is where the sellers are. This is where there will be a surplus of sellers, all right, at a resistance. And at a support, that is where there will be a surplus of buyers, all right. Surplus of sellers at resistance, a surplus of buyers at support, all right? So this is where you get your buyers and this is where you get your sellers, all right? Does that make sense so far? That's literally what support and resistance is, all right? That's literally what support and resistance is. Resistance resists the price, support, it supports the price. That's it. There is no other magic to it. And it works. All right. Support and resistance usually form as the market goes up, all right? So in the most basic ways, there are two ways to trade all right. Support and resistance is to demand and supply and smart money, all the same, and it's the same thing. I've said this before, and I'm like, like things like smart money concept, it's price action that just went to private school. They just explain it in different ways, many ways to kill a cat, but it's the same thing. It's supply and demand. That's what it is. With smart money, they've found fancy ways to try and explain it, and but that's literally, it's the same thing. Simplicity is the ultimate sophistication. Yes, we'll get to that. We'll get to that someday. So as I said, there are two ways to trade support and resistance, right? Another way is the bounce, another way is the break. So the bounce is when the market bounces off a resistance or support. So for instance, if the market goes up and it finds a resistance and then it bounces, then you can take a sell over there. And then if it comes to a support and then it bounces on the support, then you can take a buy over there. All right. So and then the other way is what? The break, to trade the break. Now this is when the market breaks the resistance, then you continue buying, and this is when the market breaks the support and then you continue selling. Literally, that is what buying, selling at resistance and buying at support. You sell high, you buy low. or you buy at the break. If the resistance is broken, then you continue buying. If support is broken, then you continue selling. As simple as that. All right, now we're gonna look at a few examples. All right, we're gonna look at a few examples, and I'm gonna teach you guys how to plot support and resistance. All right, let's get to it. All right, now one thing that we need to we need to be very, very clear about when it comes to support and resistance is that there is no definite answer to how do you how do you plot, or where do you plot your support and resistance. Most of the time is the zones, it's not the price, right? Although you can use price as support and resistance, but most of the time it's at the zones. Are we together? All right, they are not exact price. All right, oftentimes you will see a support or resistance level that appears broken, but soon after that you will see that the market was just testing it. All right, as you can see on this chart over here, we have our support area at 1.4700, and then we see that if you are just looking at this part alone, let's say this candlestick, and the market went all the way down, all right, market all the way down, you'll think that support is broken, but then eventually the market comes back again inside there, and then comes back, rejected again, tested again, and then it continues going up. Which supports are valid and which are invalid? I mean, price respect the support, now price doesn't respect the support. So we're gonna get to that. Where I show you. Remember now, this is exactly what I'm saying right now. You can't just use support and resistance alone. You need to partner it up with other things. You need to understand momentum, you need to understand trends, you need to understand reversals. For instance, here we see there is a formation of a double bottom on this. All right, we see there's a formation of a double bottom, we see there's a doji there. So there are other things that the market are communicating to let us know that there is a possibility of a reversal. Now if we start looking for sells here because we assume that the support was broken, we have an issue. So that's why you need to have a confluence, you need to have many other confirmations before you can execute a trade, which is the reason why we host these sessions. All right, now as I was saying, it's important to notice that support and resistance, it's not just a number, it's not just a price, but you can refer to it as a zone. As we see here, this price was broken a bit, but the market came back, but this whole zone was respected. All right, does that make sense? Does it make sense? Huh? Does it make sense? Can I have did I answer your question correctly? All right, now let me show you again what I mean when I say just because a support seems broken doesn't mean that it is in. Now let's have a look at this chart over here. See, what happens is the same chart. The market came here, we thought it broke it, went up, we thought it broke it, went up. Now eventually it broke it, but then what did it do? It came back inside again. All right, it came back what? Inside again and continue going up. Do you see that? You see what happened? So that's why I say we need to look more at the zones and not the exact price. All right, that's why you need to look more at the zones and have confluence with other price action patterns, reversal pattern, understanding charts, trend lines, and all of that. So these are some of the things that we really need to look at. But for now, again, we're just understanding the basics of support and resistance. As I said, it's more about the zones, not rather the price. All right, so yes, so a typical example is what I've shown you here. The market has been going down, tested the support, broke it, but then eventually went back inside again. This is again, the zone was not broken. The zone was not broken, which is why we wait for a break, a retest, a formation to let us know that there is a continuation of that trend. Are we together? Are we together? So one of the ways that I can help you to plot support and resistance is if you use a line chart. All right, now let's see if you use a line chart. Line charts are best if you want to plot your support and resistance zones. Another way that you can plot your support and resistance zones is, remember I told you guys about the RB numbers, the psychological numbers. I've taught you guys this for at least about 3 weeks. You should understand the concept of those round numbers. You can use those as your support and resistance and zones, and you'll notice that market always respect those zones. So same way you can also use a line chart as depicted in this. And the reason why we use a line chart is because the line chart tends where the market closed. There is no wicks or shadows when it comes to the line chart. So for instance, if the market turned here, this is exactly where the price closed for that specific time frame. If the market turns there, there is no shadows, and that's exactly where the market closed. So you want to use that to plot your support and resistance. Do we have any questions pertaining to support and resistance? Do you guys have any questions pertaining to support and resistance before we proceed? All right. Do we have any questions? Please let me know if you have any questions. Please let me know if you have any questions. Please let me know if you have any questions. Again, in support and resistance, we have minor and strong. We have minor resistance, minor support. We have strong support and minor support. Now, minor, it means it's a support or a resistance that is not tested often. It's either just, it's tested once and then the market breaks. And the one that get tested many times, those are what we call support and strong support and resistance, or major support and resistance. All right, as you can see here, the market came, tested that, tested that, tested that, tested that. That is a major resistance because the market tested it many times. So the more the market crystal clear, all clear, got it. Thank you. I love it when people say they got it. And by the way, like I said, guys, do not ignore the concept of support and resistance. And I understand it seems simple, but this is literally what trading is. You sell high, you buy low. It's as simple as that. You sell high, you buy low. We use support and resistance, but then again with confluence with other strategies as well. Which time frames we use to draw support and resistance? Support and resistance is on all time frames. However, understand that the higher the time frame, the stronger the support and resistance are. The higher the time frame, the stronger. So I usually plot my support and resistance on a daily chart and the 4-hour chart. All right. But then if we are looking for a more long-term view of the market, we can go to the higher time frames like your weekly time frame and the monthly time frame. And also depending on what type of a trader that you are, I'd say plot on the daily and the 4-hour time frame, and then you can then go to the smaller time frames and start plotting there, like on your 5 minutes, 15 minutes, and you can start plotting them. Then if you're a scalper, for instance, you can plot your support and resistance on the 5 minutes, 15 minutes. And if it gets broken, if either you trade in the bounce or you trade in the breaks, then you can do that on the smaller time frames as well. All right. So yes, all time frames, support and resistance is that you get, like I said, you get minor resistance, you get minor supports, you get major supports, you get major resistance. All right. So yes, these are some of the interesting facts that you might want to write down. All right. When the price passes through a resistance, that resistance potentially turn to a support. All right. So once the market breaks a support or a resistance, that particular level tends to the opposite. All right. So if it's a resistance that gets broken, it now becomes a support. And if it's a support that gets broken, it now becomes a resistance. All right. Number 2 is the more often price tests the level of resistance or support without breaking it, the stronger the area of that resistance or support is. All right. And number 3, when a support or resistance level breaks, the strength of the follow through move depends on how strongly the broken support or resistance had been holding. Now let's move on to the chart, and then let's see if we can plot some support and resistance over there. Let's see if we can let's quickly go on gold. Where's gold? Let's go on gold, XAU USD. There we go. Let me see which one am I going to use. Let's use German 30. Now let's see if we can plot support and resistance over here without using the RB numbers. Now just looking at this, that is my support, all right, and that's my May resistance. All right, you can either use the wicks, you can use the bodies. Like I said again, it's about the zone, it's not about the exact price. But then interesting thing, if we were to go to RB numbers, let's look at that. Let's see, our next RB number will be 1980. Look at that, look at that. See how amazing that is. See how amazing that is. That's why I prefer RB numbers over just plotting. So 18, let's do 1890 because we go in. Look at that. Just look at that. So this is basically a zone, your support and resistance zone. All right, and this is your other zone over there. All right, now in within, let's see if we can plot more. That is your support and resistance area. That is your support and resistance area. That is your support and resistance area. And as you can see, even in history, the market always respects these things. So for instance, like I said, this was a resistance area. It was tested twice. Market came down to this support. Now this support was broken and now it became a resistance. Same as this one. This was maybe let me just add some text over there. Let's do resistance. Let me do SNR. SNR support and resistance, guys. Yeah, man. Oh boy. I hope you guys do understand what I'm trying to do. SNR. Right? Same here. Support turns to resistance. Support turns to resistance. You see? And as I had mentioned, just because it was broken doesn't necessarily mean that we're going to continue going down. So we need to look at other things as well. For instance, here the market was broken, but we had a double top, a double bottom formation. So that signaled a reversal. So if you just acted on the support alone on this break, you would have entered and went down all the way down. You would have entered a sell and the market would have kicked you out when it shot all the way up. All right. So now we can see again here. This was initially a resistance, now turned support because it was broken. Resistance, now turned support. Right. Same. What did I do now? There we go. There we go. You guys understand? Now this has been broken. Now we're still gonna analyze what's happening to gold. All right. If you were here last week, you will know exactly what happened. The market broke out of the trend line, came to test the trend line, and we're shooting all the way up. I would say our next price will be that we can look at is 1940. That's another price of interest, and then from there we can look at 1950. We definitely go into 1940, then we can start looking at the 1950 price. See? Make sense? Does it make sense? Okay, I believe so. Now let's move on to There we go. All right, great. Any questions regarding support and resistance? You know how to plot them, correct? I believe so. Now let's look at triangle chart patterns. Triangle chart patterns. Now, triangle chart patterns involves price moving into a tighter and tighter range as time goes by and provides a visual display of a battle between bulls and bears, or between sellers and buyers. Right, the triangle pattern is generally categorized as a continuation pattern, meaning after this pattern completes, it's assumed that the price will continue in the trend direction it was moving before the pattern happened. All right, a triangle pattern is generally considered to be forming when it includes at least 5 touches of support and resistance. So you need at least a minimum. The line charts are clear. Exactly. Say, I don't understand how you draw RB numbers. Is it fib numbers? No, it's not fib numbers. What I can suggest, Zishan, is go check our live trading session that we had not last week, 3 weeks ago. The third one from this one. Please go have a look at that. We explained in more details what RB numbers are, but in simple terms, these are your round numbers, like your tens, your 50s, and your hundreds, like 10, 20, 30, 40, 50, and hundreds, 200s, 300s, 400s, and your thousands, 2,000, 3,000, and so forth. These are prices. So wherever the market, whichever pair is at that price, where there's a zero at the end, or a 00 or a 000, those are what we call psychological numbers. And the reason for that is what we call the round number bias, because people tend to generally round off to the nearest zero. So for instance, if something cost you $99, you're gonna say it cost you $100. If something cost you $900, you will say it's $1,000. If something cost you $9,900, you'll say it's $10,000. So the same applies to forex trading. The big whales, or the market makers, they tend to put their prices on these round numbers, or RB numbers. They tend to put their orders on these round numbers. They take their trades on these round numbers. So for instance, we saw with gold. Let's just quickly go back there. Let's just quickly, my apologies for that. Let's just quickly go back there. So for instance, you will notice, let's do 1910. You see, that's a round number. It's our tens. You see, this is whenever market reaches this price, there is some sort of a movement. Even when we go back into history, there is always a movement on that price, right? Let's look at 1930. Let's look at 1930, for instance. Let's look at 1930. See, exactly at 1930, that's where the market has been turning. That's where the market has been turning even in history. All right. So these are very, very interesting concept. 1940, we see the same thing. The market reacts whenever it gets near or at this price. There is always a reaction. See there, that has 1940 has been a very strong support area. All right. You see, now with 1980, look at that at 1980. The big whales put their prices in, the big whales put their orders in these prices. All right. Does it make sense? And again, just to show you, as I see someone say line charts are clear. Look at that. Look at that on the line charts. You can easily put your support and resistance on these line charts. All right. So you don't get confused with the shadows. They are very, very clear. And then now when we switch back and you look at what's been happening there, brilliant ways to, there's many ways to kill a cat, as I said. But again, Zishan, just to give you an understanding of the round numbers. But if you can go back and look at our previous sessions, hopefully we'll do a revision of it very, very soon. But if you look back at the other sessions, you will get a clear understanding of what those are. All right, now let's move on. We are running out of time. Let's move on. As I said, triangle. Let's move it. Let's look at triangles. All right, as I said, you need a minimum of 5 touches. All right, you need a minimum of 5 touches inside the triangle to make it valid. All right, for instance, either it can be 3 on the support, 2 on the resistance, so it can be 3 at the resistance and 2 at the support. It really doesn't matter, but there needs to be a minimum of 5 touches. For instance, we have 1 touch, 2nd touch, 3rd touch, 4th touch, 5th touch, and then the market broke out. All right, that's what makes a valid triangle chart pattern. Now we have 3 types of chart patterns. The first one is symmetrical triangle. This looks like just a normal triangle. As you can see here, this is a triangle as you know it. Are we together? All right, so now what happens is this is a type of a consolidation. All right, it can either happen in a downtrend or an uptrend. It's more of a, it's either a continuation or a reversal. But what you need to know is your only good way of teaching. Sir, I thank you, Mr. Asif. I thank you. I appreciate it. I appreciate that you feel that I'm a great teacher and you are a great student. All right, as I said, as you see, there's a series of lower highs and a series of higher lows. This is a form of a consolidation. Now you need 5 touches, as I said, and then depending on where the market breaks out, that's where you take your orders. If the market breaks to the upside, that means we are going long. If the market breaks to the downside, that means we are going short. And as we can see with this example, that the market broke out and then it shot all the way up. Now, a lot of people will ask me, where would you put your take profit? I always say calculate the distance between where the triangle started. Where it started, calculate that distance. Most of the time, the market will break out the same distance or the same number of pips as the same as where the triangle started. All right. Now, let's look at the next one. Let's look at the ascending triangle. The ascending triangle, all right? Let's look at the ascending triangle. As it says, the ascending triangle is also, it is formed in an uptrend, right? Now, an ascending triangle, you find it in an uptrend. The market has been going up. You find the level of resistance there, which is level, all right? And then you get a series of higher lows. The resistance is straight up, it's flat, all right? And then you get a series of higher lows. We have the ascending triangle. This is found in a uptrend. Now it can be a signal for a reversal. It can also be a continuation, but most of the time, based on observation, this is usually for a reversal, because we now have a strong resistance area that the market fails to break. Eventually it breaks out of the trend line, the ascending trend line, and then it goes all the way down. Right now, as I said, price usually drops the same heights from where it started. That's what we call an ascending triangle. All right, and then we have a descending triangle. A descending triangle is the opposite. All right, a descending triangle is the opposite of an ascending triangle. We find is in a downtrend, and I said it can be a continuation or it can be a reversal, but most of the time, based on observation, again, remember, this is not a rule, this is just observation. What I've seen most of the time is that whenever this type of a triangle occurs, it is usually in a strong support area, and now the market is reversing. As we can see, we are in a downtrend and the support is flat, and then we have a series of lower highs, and then what happens? The market breaks out and it shoots all the way up. Once it breaks out of the triangle, you shoot up. If it breaks below, we know that we're going all the way down with it, but if it shoots up, we go up with it. Does that make sense? Does that make sense? Let us quickly go to the charts. Let's quickly go to gold, see maybe if we can find this type of patterns. Let's see if we can find them. Just want to see if we can find a symmetrical triangle, see if we can find an ascending triangle, see if we can find maybe let's go on the smaller time frames. Let's see if we can find something. Let's see if we can spot something on gold. I'm trying to see if we can find a triangle over there. In this triangle, where's our stop loss? Sometimes we put stop loss price at our stop loss, then go same side. Do we see and get angry? Don't get angry. Don't get angry. I'll show you where to put your stop losses right now. You just basically put it at the resistance, right? At the resistance. I want to see if we can get a nice triangle over there. We cannot spot any triangles. Let me see. Maybe GBP USD. Oh, as I said, remember that GBP USD we gave out that when it breaks out of this triangle, we're gonna shoot down. Beautifully done. Beautifully done. Beautifully done. Right. Beautifully done. I'm trying to look for a nice triangle there. I'm actually looking for a symmetrical triangle so you guys can have an idea of what to look out for when you get to the charts, okay? Well, let's see if this will work. Let's see that. No, that doesn't work per se, but we can look at something like that. All right, so we have 1 2 3 4 5. Nah, that doesn't work. That doesn't work per se. That doesn't work as a, it could be, you know, no, let me look for something. Let me look for something that could work as an ascending triangle, but you'll be a bit more confused if I try to explain it to you. So let me try and find something that's a bit clear. Maybe let's go on smaller time frames so we can get something over there. All right, we are running out of time, so I'm gonna look for them and then I'll show you guys. Let's just quickly do the wedges, and then so I can release you guys, and then we can start looking at other prices. So let's look at the wedges. So the wedge chart pattern, all right, in a wedge chart pattern, true trend lines converge. All right, it means that the magnitude of price movement within the wedge pattern is decreasing. All right, wedges signal a pause in a current trend. When you encounter this formation, it signals that forex traders are still deciding where to take the pair next. Wedges can serve as either continuation or a reversal. Now, a lot of people confuse wedges with triangles. They are not the same, but they kind of look the same. All right, so as you can see, it kind of looks like a triangle, but it's not really a triangle. And as I said, it can be either a reversal or it can be a continuation, depending on which side it breaks into. So we have, again, a rising wedge and a falling wedge. So the market is in an uptrend. What happens? You see that, a wedge, and then what happens? The market breaks out, either to the upside or to the downside, and then whichever direction the market takes. Oh, someone asked me where to place your stop losses. Let's quickly, I do apologize. So for instance, if you are trading the descending triangle, your entry is at the breakout. This is where your stop loss is, just below the support area. And if you are using the ascending triangle, this is where your resistance is. Your stop loss is just above that. And then if you are using the symmetrical, if you take in that, you put your stop loss below your previous higher low. I mean your higher high. All right. You put your thingy, your stop loss Not here, but here, the previous one. Whenever you see a bullish engulfing candle, means there will be a reversal. Not always, but you are correct. You are correct, but not always. Again, you need a confluence. You don't just need the engulfing alone. It needs to be working with other patterns as well. But thank you for that. Again, for those of you who don't understand what bullish engulfings are, we have discussed them in previous sessions, and I believe we're gonna have more sessions regarding that. So as I was saying, in terms of in a symmetrical triangle, where you put your stop losses is you will put it below your previous higher low. All right, now let's move on to wedges. All right, let's move on to wedges real quick. Okay, does that make sense? Support and resistance make sense so far? All right, doesn't make sense? I believe so. Let's look at wedges. Now, wedges are different from triangles, but they kind of look the same. So here there is a slowing. If you can see, there's a slowing of the higher highs, but the higher lows are continuing a bit, up. But there is a slow. As you can see, the slope is not going as high as you would in a proper uptrend, but it's slowing down a bit. It's decreasing. The higher highs are getting lower. They're getting lower and lower. So which signals that the buyers might be, the buyers might be getting exhausted. Now it's time for the sellers to kick in. And let's see in this example what happened. Indeed, the market broke out of that. If you entered there, market shot all the way down. That's a rising wedge. All right, this one doesn't necessarily have rules of how many touches, but we can still apply the rules, the same rules. All right, we can still apply the same rules of a triangle. You get at least 5, so 1 2 3 4 5 minimum. And then the idea here is to see the slowing down of the higher highs in an uptrend, and then in a downtrend it will be the opposite. It will be the slowing down of the lower lows. All right, let's now quickly look at what do you call, okay, remember, as I said, these act as a reversal or a continuation, right? So you can get a rising wedge even in a downtrend. All right, and now we're going to see an example of that. For instance, this is a downtrend and we have a rising wedge over there, and not a triangle but a rising wedge. What do? We have higher highs that are what, slowing down a bit, and then we have higher highs, we have higher lows that are going up, again signaling that the buyers were a bit exhausted. And what happened? The price broke out on the downside and it went all the way down. Price can break to the upside as well. All right, price can break from the upside too. It's best to learn candlestick patterns before chart patterns. I agree with you, which is why we have done candlestick patterns in our previous sessions. Thank you so much, Mark Ford, for that. For those of you that are here for the first time, we have discussed candlestick patterns. We have discussed single candlestick patterns. We have discussed double candlestick patterns. We have discussed triple candlestick patterns, and we have discussed other chart patterns as well. Okay, now as I said, you can find a rising wedge either in a downtrend or in an uptrend. It's named rising because it's breakout downside. Yes, not necessarily that it breaks out on the downside. Again, like I said, it can break to the upside as well, but most of the time it will break to the downside. The reason why it's called a rising wedge is because you see it looks like a wedge, but it's rising, it's going up. That's why. All right, now let's look at a falling wedge. A falling wedge, as I said, the lower lows get pretty much what? They get a bit higher. The lower lows are getting a bit higher and the lower highs are getting, and then what happens? The market breaks out of that. the market breaks out to the upside and we shoot all the way up. Same thing. Okay, this was in a downtrend. Now let's look at an example of an uptrend. This now acts as a continuation. We are in an uptrend. What happens? Lower lows are getting a bit higher, then we have lower highs, and the market breaks to the upside and we go all the way up. All right, as I said, guys, thank you so much. That's it for today because we are running out of time. Man, I can't believe I talk a lot, don't I? I've been talking for an hour already. Yes, I talk quite a lot, but I believe that it was not, I was not just making noise. I believe that I was teaching you, making you guys understand things that you didn't understand that can give you an edge in the market. And as I promised you guys, if you stayed up until the end of the session, all right, as I said, if you stay up until the end of the session, I'm going to give you a promo code that you can use to get your 100% trading bonus. The promo code is Isaac Edu, Isaac EDU for education. So make sure that when you deposit, you use that promo code to get your 100% trading bonus. This promo code is valid up until the 31st of September, and it can only be used once. It can only be used once. Tell me something about the 3 push upside pattern. Please, not last week's session, 2 weeks ago, we had a session where we discussed the 3 inside ups, the 3 inside downs patterns. Please go have a look at that. We discussed it in more detail. Please, guys, always go back to what we have discussed so you can learn more. Repetition makes you a master. All right, repetition is the art of the masters. Right, so keep repeating the information until it gets downloaded in your subconscious mind and you don't need any more of it. All right, so do you have any questions as we let's look for an opportunity. Let's see if we can get an opportunity in the market currently. Let's have a look at US 30. Let's have a look at US 30. All right, now let's see if we can get a nice, what's our next, so we are in an uptrend currently on by once, do you mean by only one person? Yes, only one person can use it once, but you can share it with your friends, you can share it with your colleagues. Everybody here will use the same promo code, and then they will get the 100% bonus. All right, so let's have a look at that. We are currently in an uptrend on the US 30. The market reversed, so there was a retracement all the way to the 600 RB number. All right, and then the market is giving us a double bottom formation there. All right, so that now means we are actually, all right, so we broke and we turned, I think, around the 50 mark. That's correct. All right, let me just show you the 50. 3750. So, and isn't that neat? That's beautiful, man. Isn't that beautiful? All right, so now I believe what the market will do, as we see over here, 2 scenarios are going to happen. All right, either this scenario is going to play out where the market exactly where it is now at 700 is going to continue pushing all the way up, or the market is going to come down here again to test the 600 price before continuing going up. But I would say we can enter a buy right now on US 30 because of this double bottom pattern over here. The neckline was broken, the neckline is being tested right now. We can go all the way up. If we break this and go down a bit, I would say we would come to this price here at the 600 price to test out this area over there. All right, this zone over here. So between 34650 and 34600. The market will come and test that zone first, and then test that zone and then go all the way up, or exactly where we are, we can take that buy. I am currently in a buy on US30 that I've taken from this price here before it shot all the way up. I took that entry over there. I don't know if you guys can see it. We took that trade over there, but we are anticipating that it will continue going up, or it will come back here. Let's see what happens now. We are on the 1 hour chart. Let's see what happens with this candlestick, and then we can execute our trade. All right, do you guys have any questions? Do you guys have any questions? So you can execute a buy on 34700, or you can set your buy limit at 34600. But I believe it's gonna start shooting up right now, and then we can put our take profit at the 34800 price. That's 100 points. Good money, good money, good money. That's good money. Should give you about a how much would it give you? Let's see, with the 1.1 from here, yeah man, 34800. Should give you with about $120 with the 0.10 lot size. Should give you about $100 or so. All right. Do you have any questions? Do you have any questions before we? Do you have any questions? Could you share me the link of the 3 push pattern, Mister? It's on the OctaFX on this YouTube channel. It's on this YouTube channel. Just check the videos that have been saved here, and then you will find it. Just look for my face. Look for my pretty face. I'm smiling like this. Just look for my face, and then you will find it. We've discussed it. And again, I also recommend that you go look at where we're discussing the round numbers. Beautiful, beautiful concept, as you guys see over here. All right, that's it from me, guys. I hope you guys had fun with me today. I did have fun, although I was a bit tired. Man. It's been a long week, so it's been a long weekend, I meant. So yes, that's it from me, guys. I will see you, I believe, the next session we're gonna have, I think it's in 2 weeks time. So do look out for that, and I hope you guys are gonna have a profitable week. It's a Monday today. We already had a profitable Monday, so looking forward to a profitable week. I wish you guys all the best in your trading journey and in everything that you do. I hope you stay blessed. I hope the family is happy. I hope there is love at home. I hope you are all blessed and you guys have yourself a good night sleep, and let's wake up tomorrow refreshed, ready to tackle the market and make sure that we all win. We are all profitable. Can you guys hear me? No, it is audible. I think the issue is on your side, Manish. But yes, you guys have a profitable week ahead. I wish you guys all the best, and remember, God loves you, I love you, Jesus loves you. Have a great week, not weekend. Have a